Good day everyone, this is your European Open briefing for Thursday, September 1st. My name is Michael Florentiades, I am the Chief Economist here at xm.com. These are the key points you should know about today. The dollar is more or less on hold ahead of Friday's employment report. We will also talk a little bit about the euro dollar and what's happening there with the euro. On balance, there were positive manufacturing survey data out of China. Crude oil dropped following weekly US inventory numbers. This also had an effect on risk sentiment and on petrocurrencies, of course. And on today's calendar, we have European PMIs looking ahead, manufacturing ISM in the United States, and of course, weekly jobless claims as it is a Thursday. On to euro dollar, just to show what the two most important currencies are doing right now. As we said, more or less in a holding pattern. We are waiting if the news from the labor market we're going to get tomorrow are going to back the Fed's message of one or possibly two hikes this year. Euro USD has spent the past 24 hours in the 111.20 to 111.60 range. The euro was also not helped by a miss in inflation data the previous day. We'll more about that in the next slide. The dollar, however, was helped by an okay ADP employment number, slightly beat estimates, and good pending home sales. Those far exceeded estimates, but it was hurt by a weak Chicago PMI. Looking at inflation in the Eurozone, it missed estimates of a rise to 0.3% year-on-year, staying on 0.2%. As you can see, pretty much stable for the past, let's say, the past 2 months, between 0 and 0.5%, hasn't been above 0.5% since mid-2014. Core inflation also stayed on to 0.8% instead of rising to 0.9% as was expected. So, as we said, a stable core inflation, but it was preferable to have a pickup because this inflation picture is pretty much keeping ECB in the game of possible extra stimulus, let's say, because they are targeting inflation. So if inflation is shown to be backtracking, they will probably provide more stimulus. Unemployment in July also did not decline to 10%, stayed on at 10.1%, so that was also not such great news. So overall, the data did not help the euro to take advantage of this lull, let's say, in the dollar strength ahead of the non-farm payrolls. On to China, we had a relatively positive PMI for manufacturing from the official National Bureau of Statistics. It jumped from just below the 50 expansion contraction line to 50.3, if I am not mistaken. So the Caixin had a slight miss. It was expected at 50.1. It came around 50, so more or less a neutral picture coming out of there. Services index dipped. You see services here, but it has remained in expansion territory. You see services, they are well above the 50 line, between 53 and 54. So the rebound in the official PMI is noteworthy because it is above 50, we should note. Now, on to the price of oil, you see the price of oil falling to from around $46 a barrel to just below $45 a barrel. This hurt petrocurrencies and has caused some risk aversion, hurting energy shares the most, of course. So the focus on the oil price is falling. You see quite substantial losses for oil this week. From 47, we're not for the US contract, oil contract. Now we are down to 45. Now, onto the calendar, it was a busy day. We already mentioned the Chinese data. We had Australian capital expenditure for the second quarter, worse than expected at minus 5.4%, was expected at minus 4.2%, but not much impact on the Aussie, And we also had flat retail sales month on month. It was expected we were going to get a rise of 0.3%. So not such a good news. One could also point to the manufacturing PMI from the Nikkei earlier out of Japan, more or less stable at 49.5. And then the Eurozone PMIs, probably the most important number is because we are talking about final PMIs for the Eurozone, so they have already been announced. Most important number is the market manufacturing PMI out of the UK, which is expected to rise a bit from 48.2 to 49. So later on in the US, we are going to get jobless claims, of course, around 265,000 expected. Some revision in the productivity numbers, which caused quite a debate when they were released, so they are going to get revised. And of course, later we will have the ISM manufacturing PMI. This could move the dollar. It's an important survey, manufacturing. It's the most important manufacturing survey for the US. So, and later on, we were going to get vehicle sales again in the US. That's all from me today. Thank you very much for watching and have a great day.